Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to be for high-quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market, then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, so essentially hedge funds, the big players in the market. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. Now, starting from the monthly time frame, what we can see is that we have a market which has now broken above a quite strong level of previous monthly resistance. In fact, we can see how from here all these previous rejections to the downside were created, and now as the market has broken above this level, this previous resistance is now turned support here. So as the market is retesting this quite strong level of previous monthly resistance turned support, we could expect some bullish continuation to be created away from this level for a rejection to the upside away from the strong support and demand area from a monthly standpoint. Now, dropping down on the weekly time frame, what do we see? Well, from a weekly standpoint, first of all, we have to follow the pattern that the market has created. We have a clear impulse followed by this correction. In general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have the 0.618 and 0.786 Fibonacci retracements lining up exactly inside of this area, creating a confluence of support inside of this zone that we could in fact expect this market to reject to the upside. So from a weekly standpoint, everything seems quite bullish, and we could expect more bullish continuation to be created away from this level. Now, dropping down on the daily time frame, what do we see? Well, here on the daily, I did speak about gold quite a few times in the past. I spoke about it when the market was here. I explained all the reasons for which we could expect this impulse to the upside, and that is exactly what the market gave us. Then we had this impulse and correction. From here, I explained all the reasons for which we could expect the creation of this daily higher high, and again, that is exactly what the market gave us. Then we had the creation of this M pattern, and from here, I explained all the reasons for which we could expect first this impulse, then the correction, and the continuation to the upside. And again, that is exactly what the market gave us. And in the very last analysis, I explained all the reasons for which, if the market here would have created an M pattern, which the market did, we could then expect this move higher for the completion of the pattern at the neckline. And in fact, that is what the market gave us. The market created this move to the upside as we wanted to see, completing the M pattern at the neckline, exactly as I pointed out in my last analysis. And by the way, I will link in description all those previous analysis so you can go and check them out for more free education. Now, continuing with our analysis here from a daily standpoint, before we go a little bit deeper into the technicals here for gold, first, let's go and see what we have when it comes to the commitment of traders, so what hedge funds, so the big institutions in the market are doing, and how they are moving their positioning. Now, what we can see here is that with the last reports, net positions have been growing aggressively. We went from having 71.4k net positions all the way up to having 203.5k net positions. So we had a huge increase of the net positioning, with institutions moving back to the bullish side for gold. Now, what this shows is that as institutions are longing gold, we could expect more bullish price action. So long setups seem to be favored. Now, keeping that in mind, that institutions are currently longing gold, more than doubling essentially their net positioning and growing their longs from 220k to 288k and closing their shorts from 148k to only 85k. Let's keep that in mind and let's jump back to the technical side of the market. Now, what we have to keep in mind is that even though the monthly, weekly, and the COT data are all pointing to the bullish side. Here on the daily time frame, we just had a massive rejection to the downside, and we currently still have bearish structure, because what we can see is that the market here has just created a new lower low and lower high. That is the definition of a downtrend. A downtrend is a series of lower lows and lower highs. Now, if we want to shift back to creating higher highs and higher lows, we need to see a break back above the previous high. Now, in this specific case, the previous high would be this level here, right? Only if the market will break back above this level, only at that point we could expect more bullish continuation. So this is a key area at the moment for this market. Until the market will remain below this level, it can easily continue lower. However, things would only get interesting if we get a break above the level. In fact, if the market breaks above this previous resistance would become support here. And after a break on the retest of the previous resistance turn support, that is where things would get interesting, because inside of this previous resistance turn support, this is the area in which we could get more institutional longing, which at that point would further increase the probabilities of a potential rejection to the upside away from this level. So, to recap, until the market remains below this resistance, this market will easily continue lower. However, if we get a break above, after a break on the retest, here is where I could be looking for a potential move higher. So how I could be approaching this potential move higher. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, potentially, what I could be doing is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market, as we would have, to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to me one of my valid entries at that point, I could be looking for a potential move higher for the market to complete this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked both in description and in my bio. Here, you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here, past the testimonials, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the checkout process. So I really suggest that you go and check it out as soon as possible. The link is both in description and in my bio, and I will see you in it. If you enjoyed the video, make sure to drop a like, and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.